Well, welcome. This is a podcast. It's a Monday, 2nd of November, one day before the big election in the United States. And I have E.B. Tucker with me, author of this book, Why Gold, Why Now? And E.B., I will try not to do most of the talking. We want to hear what you have to say, but I have to admit, it was one of the most enjoyable books on gold, and I have read a lot of them. And when I got it, and thank you for sending it, I thought, oh, well, another gold book. I'll do it. And I started in, it was hard to put down. So I commend you on that. Next thing, it's all about me, of course, is the title. I was interviewed by Monex probably close to 20 years ago, and the title of the interview was Why Silver, Why Now? So when I saw Why Gold, Why Now, I had to chuckle a bit. So let me turn it over to you. Introduce yourself for those that don't know you. I know you're well known with Doug Case and everything else, but there's always a few people that are just getting on board the gold story. So why don't you give some background and we'll start talking about your book.
Sure. Well, thanks for having me, David. And I've probably known you through the conference circuit and socially for maybe 10 years now. But what most people might not know is that before that, I managed a small equity fund where we bought gold and silver securities. And Brett Heath was my partner, who's the CEO of Metalla. And so we did that for a number of years, and that was really where things started to solidify in the gold world for me. I mean, I probably bought my first ounce in 2004. Which it's kind of a long time ago now. I mean, 16 years ago. I mean, you're back at $400 an ounce or something. And I tell in the book, I was enamored with gold, right away. But it's been a journey. So part of the book was to explain to people in the beginning, why should you even listen to me? What am I, just some other guy talking about Roman history or a bunch of things nobody cares about? So what I try to do is lay out my personal journey, of how first time I held an ounce all the way till today, where I'm writing this book and I'm on the board of Metalla Royalty, which is a big play for me. But here's the important piece of the equation. This book was written in 23 days. And what happened was I was with a friend of mine who happens to be a Zen master in Florida. He's a very interesting guy. And I was telling him about gold and what's happening, because he was asking me, this is during the virus shutdown, remember, the economy was all, and so I was telling him stuff, and he said, EB, nobody knows this stuff. Nobody knows what you're talking about. And here's a smart guy, he's got all these degrees and he's traveled around the world, late 70s, and he's brilliant. And he said, people just have no clue, and you got to do a TED talk or something. And I said, well, there's no point in that. And then I got the idea for the book. And so 23 days, it came out, in one lump sum, like a bolt of lightning. So,
yeah. Well, again, that really was a pleasant read. So I've highlighted some things. I'm sure we could talk about it 6 hours, but you could probably read it in that amount of time. So first thing I highlighted was page 20. The value of all the gold in the world was just under 10 trillion in March 2020. Then if you go to the back of the book, I'm going to try to tie these together. And you say, history reveals an ugly pattern of government spending tomorrow's hard-earned savings today, leaving unknown savers holding the bag. So then we tie those two together relative to the amount of gold, relative to the financial markets at large, and that the governments are notorious throughout history for leaving savers holding the bag. So can you connect those two and elaborate, please?
Yeah, I mean, so everybody knows there's a problem. I mean, they know something is not right, and they know that the government can't just create, $5-6 trillion a year in new currency and push it into the market. And people, they instinctively know that something is wrong. But the problem is that you get lost in the day-to-day blitz, of emotional media. I mean, I don't have a television. People are baffled by that. But I said, well, television's called programming. They say you're television programming. Well, what do you think they're doing? They're keeping you in this confused state so that you don't see the big picture. So what we tried to show was that you've got real wealth, and then you've just got this slow, controlled erosion. I mean, that's the ultimate goal of Powell and the Fed, is to inflate at 2%. I mean, if they can do it, right? So, I mean, they're telling you we're going to give you a 2% haircut per year, and you can have treasuries that pay 75 basis points or something. I mean, they're telling you this is what they're doing. So they're trying to manage this. I mean, it's almost like trying to manage a drug problem. It's a good idea, but it's really hard to manage it for very long, because the natural order of things is being changed. And so what I wanted people to see was that if you even have $1,000 in savings, that's wealth. That's real wealth that you've earned. And then you've got to do something with that wealth in order to preserve it, because at the end of the day, if you don't notice what's happening, it's a slow fleecing. And I hope that that's what people see when they've kind of read all the way through the book, is that, like, look, I mean, it's not just for billionaires. I mean, the people that need advice on preserving their wealth in this type of environment are average people. It's not the billionaires have called guys like us. They're like, what do I do? We tell them. But the average guy that's trying to make it needs to wake up and realize, wait a second, I'm going to pay for all this. I'm the one that's going to pay.
Right. Well said. So going to chapter 4, gold confiscation, I just want to again preempt a slight bit. So I've used the word confiscation well over 100 times in interviews like this, but really the truth of the matter is confiscation, the technical definition, isn't what happened. What really happened was it was nationalized. The truth is that the government said, we're going to pay you face value. Gold is valued at $20.67 per ounce, and you were required to turn it in subject to the law at hand, which means you turned it in and you got paid that going rate at that time under penalty of jail time or fine or both. So a lot of people did, and a lot of people didn't. I'm going to drag on here, EB, forgive me, but listening to John Exter's, one of the few interviews that still remains, he claimed that a lot of people just did not turn in their gold. They held on to it, buried it in a coffee can, and buried it in the backyard where mama could watch it from the kitchen doing dishes. Doesn't mean that true or false. It's anecdotal, but it does give the idea that some people just, said, look, I'll take the risk. I'm going to hold my gold. Regardless, you have some very interesting views on confiscation. So with that backdrop, you can add to it. You can argue with me if you wish. You could pick up from there and move it forward. What's your thoughts on confiscation?
I think the characterization of nationalizing is fair. I mean, like, I think when they do it, I think they'll do it this time. I think they'll do it through an excise tax. I mean, that's ultimately what they'll do. It's like the AIG bonuses. I mean, they said, feel free to keep the bonus, just be a 99% tax. So it's like, that's effectively doing it without calling it that. I told the story of my grandfather because it's a story he always told me, that his mom had this cigar box full of coins, which he guessed probably at the end of his life would have been worth about $1.5 million. This was like a whole bunch of French coins and a bunch of European coins that they had picked up over the years. And she let each kid keep a coin. So you could keep, I think, 5 coins. There was some threshold that you could keep as souvenirs. And then she turned them in. So I always thought she was like a sellout or something. But as time went on, I realized that she was picking up every newspaper had a giant editorial on the front page about how anyone with any gold was anti-American or something. And I mean, by the end of it, they had her feeling like, well, I mean, I'm not an anti-American. I mean, family lived through the Civil War and everything. I mean, it's kind of like I'm definitely not against my country. And so that was the feeling. So I think that's what will happen again. Now, the good news for people listening to this is it probably happens at much higher prices. It's not a scenario where you do an excise tax and make gold this evil thing at $1,900. It's not. Most people have no idea what's going on with gold. They don't know where to get it. They have no clue what's happening. So you've got to advance to a level where it becomes this boogeyman, and that's probably at much higher prices. Now, were people smart that held on to the gold? I don't know. It was how many years? 39 years until you could do something with it. And probably, let's say that you were 30 at the time, and you had the wherewithal to figure out what was going on, which meant that you were very connected. I mean, the most connected people, as you know, took the gold out of the country. Okay, so all right, but let's say you weren't that connected, but you listened to podcasts like this of the day, which I don't know where you would have gotten them, but maybe some like rogue groups that you're involved in of intellectuals, and they said this gold thing is not a good deal, we should keep the gold. You're 30. Well, you're 69 by the time you can trade it again. I mean, you've probably completely lost interest. You've watched all these different things happen. So was it a good idea to keep it? Maybe. I mean, you were a cowboy, which I happen to think is always a fun way to live your life. But at the same time, I'm not sure it was so practical. And my guess is that gold takes off. I think gold takes off beyond what people think right now. I mean, that $12 trillion number today, I mean, why can't that be 25 trillion? I mean, there's no reason why it can't be 25 trillion, which is going to effectively be 4 years the federal budget the way we're running, right? Which is pretty crazy. So 25, 30 trillion. I mean, as you know, the discoveries aren't that great. I mean, the production, I think, fell at 3% last year, rate of decline. So, I mean, probably they'll find some more gold, but it's not going to be anything totally dramatic. So why can't gold go to 3,000 or 3,500 or 4,000? I mean, we can't make a target, by the way, until we see more. And everyone always wants the ultimate target. You don't know. I mean, I can tell you that I can see the path to 2,500, but I can't see the path past that right now because I don't know what's going to happen. I didn't know there'd be a coronavirus government shutdown with direct transfer payments to everybody in the country. I didn't see that coming. I mean, I was with, a famous investor that is a shareholder of Metal in the Bahamas in January. We talked for 3 hours about all these things, with what's going to happen with gold. That didn't come up once. I mean, we didn't even know that was cooking. So the point is if you said gold's going to end up at 5,000, it's really guessing something at a carnival because you don't know until you see a few more pieces of clues. Okay, so we can see 2,500 receipts. Now, why are we laying that path for people? Okay, let's say that Jerome Powell and the Feds and ECB, think about it, the ECB is gaining power rapidly right now. I mean, they're issuing federal bond for the first time. There's all these things happening that nobody's paying attention to. But let's say these guys, these monetary scientists, like Buffett said recently that if this works, why did it take so many thousands of years to figure out, right? Because people have been wanting to do this since the beginning of time. So let's say that they actually got it figured out, and the system, they can manage all these things that we always thought price mechanism you couldn't manage. I mean, like you've never been able to manage it in the history of man. But let's just say they can do it. Well, what will they do once they have the ability to do it? I mean, it's like the junkie. I can manage my dope addiction. Well, what are you going to do then? You're going to get high all the time. So, I mean, you're just going to take it to the next level of extreme. And there's definitely going to be unintended consequences somewhere. So the better they can control it right now, the higher the ultimate price for gold is. Now, once we reach a point where the system implodes, it changes into another system. That's what happens. It doesn't go back to the caveman era. It evolves into another system where they try to control the transfer to that system, right? Okay, gold is much higher prices, and then you get a forced conversion. And the penalty for not taking the conversion, is going to be an excise tax if you try to sell it, and you say, well, okay, I'll just keep it buried like people in the 30s. Is that a good idea? Maybe not. I don't know. I mean, it depends. Like at our age in life, and career points and all this stuff, you start thinking 50 years from now, I mean, do I really care? You know what I mean? And are my kids even going to listen to me? Or are they going to be like, I want a Jeep Wrangler right now. I don't care about 50 years from now. You just say, figure it out on your own. I'm not mad at my great grandmother for giving away the gold. I mean, honestly, looking back on it, I might have kind of thought she was nuts for committing the act of treason, which is what people called it, right? For 39 years. I mean, anyway. So anyway, I know that's a lot for people, but in the book, as you know, we lay out this case this is dominoes. Negative interest rates is a domino. MMT is a domino. Paying people not to work is a domino. Yield curve control, it's a domino. Confiscation, nationalization, forced conversion, excise tax, whatever you want to call it, that's a domino. So that's coming in a sequence of events that's going to play out. What's the time between those events? I don't know. I think it depends on societal factors like we're seeing right now with this virus, the election, all these things. Like these are all, it's dynamic. It's not a static event. There's no grand plan of how 3 months later we'll do yield curve control. It's not like that. We'll do whatever we need to do to control the system. But these are the parts of the playbook that are going to be utilized. And so by preparing now, we see what should we do. Part of what we should do is benefit. I mean, really, there are going to be unintended consequences to the upside. I mean, silver, we can talk about silver. I mean, silver is going to be a wealth creator, and it's going to completely surprise the mainstream.
Well, at the risk of maybe talking on both sides of my mouth, first of all, I like to agree with almost everything. One part I like to dig a little deeper on, it's not in the book, but that's the beauty of being able to do an interview like this is, and it touches on the book. I mean, you cover so much, but you said, I don't like to project too far. I can see $2,500 gold, we got to get more data to move on. I like to work that way myself. However, and I say it somewhat differently, same idea. It's like before we get to, $600 silver or $300 silver, let's get past 50. Let's see that $100 mark that I wrote about in 2003. We've got to get through the $50 psychological barrier, I'll call it. I'll probably get up there, maybe triple top, and maybe fall back to 42. And it was, oh, see, David, you're wrong. And then it builds a base at 42, and all of a sudden we wake up, and 3 months later it's at 75. I don't know. Here's my question. I have said many times that this next leg up, wherever it ends, and I don't know when, I think it's closer to 3 years than 10, but I don't know. It will be the last biggest run to gold we've ever seen in recorded history. What say you?
Yes, correct. There's not going to be two events. It's going to be what's a coiled up spring. I mean, it goes once. It's not going to come back and pick up everybody that wanted the proof, and then take them along, right? I mean, this rocket goes one time, and silver. The thing about silver that's so interesting is, and as you well know, is that you can't just turn on the production. It's like you just can't do it. I mean, a very small percentage is organic, pure silver production. I mean, the rest comes from all these different places. And it's $50 is not a psychological barrier. It's literally a chart barrier. I mean, there's three points on the chart, and it's going to break the point on the chart. And you're right, it'll probably test the breakout, which is what always happens. And I mean, I can see 100. 100 is not crazy. You look at the chart, 100 is not crazy. I mean, it is going to happen. Now, the question becomes, how do you play it? I mean, in the book, I in some ways talk a little bit down on silver because it's really difficult to store silver, as a wealth storage. I mean, it's complicated. I mean, you've got $1 million worth of gold and $1 million worth of silver, and the gold is like significantly easier to manage. So silver is a next level asset, in my opinion. It's for people that understand what they're doing and know how to play it. Gold is kind of like anybody can figure it out. I mean, you can have one gold coin, and it's a significant savings for someone. So when it comes to silver, I mean, the derivatives, unfortunately, is going to be where the fortune is created, because when you can have outdated exposure to higher prices, and you can get that cheap. The guys that are doing that right now, that's going to be the game-changing wealth creation. Even the stocks, it's too hard. There's just not, the universe of silver stocks is not big. So you can very quickly get involved in that, and it's not, it's small. But yes, you're correct that this thing goes, and it goes one time, and the silver move is going to be much more dramatic on a percentage basis than the gold move.
Yeah, well, I obviously agree with that. Covered a lot. I want to delve a little bit more into like the Fed coin. I've been writing about it in the Morgan Report for some time now. It appears to me that this push toward the ultimate control of the bankers with no currency, no coinage. We're just going to go to digital only. Probably central bank digital currencies, the big trending 4-letter acronym all over the web right now. Do you think that these elitist bankers will allow like all the Bitcoin and Litecoin and Ethereum and all this? And I'll tell you what I've written. So, I got my neck out again. I say, yeah, I think they'll more or less ignore them. They will exist. They may continue to increase in purchasing power. But my take is that the Fed coin will be mandatory to get a mortgage, to get a car loan, to get a school loan, to hook up your utilities, to pay a phone bill. Well, go ahead and use your Bitcoin. If you want, EB and I make a decision, he wants to sell his used Lexus to me for Bitcoin to Bitcoin, no problem. Of course, they'll want to track it probably. But what are your thoughts? I think that's my take, that they're going to mandate and a digital currency is not a cryptocurrency, although a digital currency from the banking system as it's morphing can go on the blockchain, but it doesn't necessarily mean it's a cryptographic currency. So would you elaborate your thoughts on that?
Yes, this is very important because you and I both know people that are ideological about cryptos. It's very dangerous to be ideological. In fact, to be a gold bug is dangerous because you become an ideologue and you can't see what's going on. For people that are new, that are somewhat just hearing about this, this is the most important thing you can understand, is that blockchain technology, which is incredible, and the coins are mutually exclusive. Okay, so when you listen to people give you this argument, don't let them conflate the two things. Yeah, but blockchain is this and this and this and this, so that means Bitcoin is this. No, 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 no. The blockchain is here to stay. It's how you'll receive dividends, pay your taxes, track property liens. It'll eradicate the title insurance business. A lot of states in the U.S. you pay $1,000 for title insurance, completely useless. I mean, there won't be a need for it because that parcel has an identification number that can be put onto a blockchain, and everybody can see if there's a lien or some sort of violation on the blockchain. Now let's take that part, a violation. FedCoin is going to be so useful to the people in control, because if you step out of line and misbehave, we catch you with some speech that doesn't agree with the mainstream or something, whatever the case may be, a thought crime maybe, we can target your FedCoin wallet and we could say, no more spending on leisure activities for you right now because your social credit score we're not happy with where it is, and so see how this can be controlled. And people say, well, how can that be controlled? Easy. All you have to do is learn about that blockchain technology. That's how it works. Now, remember earlier this year, the kids, the 15, 16-year-old kids that were hacking people's Twitter account, like they hacked Obama's Twitter account, all these people, and got Bitcoin as ransom money. They tracked these people down because what happened was the kids tried to launder the Bitcoin. So they tried to send a Bitcoin, split it in half, send it over here, split it in half, and they found those kids. Oh, I thought it was an anonymous currency. Not so anonymous, okay? Your gold is an anonymous currency. I mean, you can melt the coin down and make dental crowns out of it and get on an airplane and fly somewhere, and nobody knows how, nobody can prove that this happened. All right. I mean, I once knew a German guy that Sri Lanka was having a coup, and he melted gold into belt buckles and chains, and then he bought a fishing trawler and he sailed over to India, got off, sold this was his escape hatch. It sounds crazy, but I mean, that is anonymous, right? So when you have to hook into a blockchain and you have to transfer on a blockchain, to keep anonymity there, you have to be running that through like a fake, Coinbase account or something or whatever. I'm not encouraging this behavior. I'm just saying, when people give you all these features, when they tell you all these things, just remember that the ideologues don't completely see the picture here. Now, the Fed is going to be able, when I say the Fed, really the government, okay? I mean, think about it. Last decade, FACTA, right? So you do Patriot Act, then you do FACTA, you do all these things. What happened? All these people came back to the US I mean, you and I both know family offices. They went to Reno, South Dakota. There's some legally friendly states that drew people in. Wyoming. They all came back. Okay, so the U.S. has had this ability to create a worldwide enforcement web, but it's cumbersome. You know, it's difficult. Now, the Fed coin is the next level. You'll be able to track every currency unit that's ever created, who has it, who holds it, who's going to spend it, what they can spend it on, you know, their entire history. You'll be able to track all that. And you're right. It'll be, I don't think Bitcoin becomes illegal or confiscated. I just think that it's not like you're going to have your Litecoin and then the Fed coin's going to say, oh, we'll just buy your Litecoin for a premium because you were so smart that you read a bunch of newsletters and bought Litecoin years ago, so you'll be able to benefit. I mean, what would the incentive be to help you? When has the Fed ever helped you? I mean, in 100 years, name one circumstance where they've ever said, let's help out these smart guys that were early to this. Okay, so it's important for people to understand. I think they don't know what it is. They don't know that how it was created or how allegedly it was created. It's very bizarre. I mean, right? I mean, this guy, how many billionaires do you know that just disappeared? No one knows where he went, right? Yeah, okay, we probably know. So it's coming. I know for a fact that the intelligence services love it because they have it. It's kind of like when Facebook came out. I mean, everybody missed that. Facebook is wonderful if you're an intelligence service because everyone is posting photographs that are geo-pinned wherever they are, and all their friends are in the photograph, and they're saying, we're having a lovely time at Grand Coulee Dam today, and you can see everyone that's there. It's brilliant. So, I mean, time stamped and everything. So if Bitcoin is the equivalent, they'll make it cool. They'll say cash is dangerous. The virus can live on cash. Only criminals would have cash, and there's only $100 bill. I mean, think about it. It's already happening. Like there was a $5,000 bill at one point. I mean, that was real money. I mean, that was, like holding 25 ounces of gold, pretty much, right? In one bill form. I mean, $100 is lunch. I mean, it's gets you nothing now. And then if you have a wad of money, which I'm sure guys like us are, we keep some cash around because you never know if you might find a deal or something. And people say, well, why do you have all that money? Are you a gangster? Are you a criminal? Something? Are you up to something? Well, what would I be up to? I don't know. You just have a lot of cash. It's very suspicious. You see, this is how you push people in this direction. And that's why in the book we're telling people, put your head up, look around, like stop having your ideological belief of how you were told the world is in social studies, okay? And the television tells you see the world just for a minute, and just assess what is happening around you. Take all these different things in. And when you do that, I think you see that the things you and I are talking about are not so crazy.
Yeah, I don't want to dwell too much on it, but you've got such a great answer and so much food for thought. So let me just stay there for a moment. To me, when I started this quest, financial freedom meant freedom. I mean, you had enough stuff in your back pocket. You could buy an island. You could quit your job. You travel the world. Not so much anymore, because now with what you just outlined so eloquently, it's like it's tied to basically your thought system or how you react. And we call it the social credit score in China, but it exists. So give me your thoughts on that. Where are we going? I'll just preface it a little bit more. And it's like, look, you can have all the money in the world, but if you are anti-government, you might not be able to buy your own jet or first class or get a 5-star hotel or rent a Lexus or whatever, because you are thinking outside the paradigm. Where do you see this going? What do you see?
Well, I share something in common with you where I tell people when I started writing a blog, I mean, everyone told me this is a waste of time, and it was technically a waste of time, but I had things to say. And what ultimately my goal in the beginning was financial freedom so that you could have intellectual freedom, because you can't really have intellectual freedom if you're commanded to go to Geico corporate office and sit in a carpeted cube all day. I mean, it's really hard to maintain an intellectually free state of mind. So I was willing back then to make sacrifices. I drove a F-150 that my friend that owns a junkyard got me this F-150 for $1,800. This is in like the 2000 zeros, like 2008 or 9 or something. And I remember driving it around, people saying, well, why don't you want a nicer car? I said, no, I want freedom. And freedom to me, it doesn't mean $100 million, $200 million. What it means is that nobody's commanding me to go somewhere. Now, fast forward to this modern age that we're talking about, and you are going to have to be quiet. It's not wise to be, let's say that you happen to be a Trump supporter, hypothetically. Well, don't go standing outside with a giant flag and waving it around. Someone will throw a brick at you. And then they'll say that you were a fascist because you were, inciting violence. This is happening. So, I mean, it's going to happen more. And there's the virtue signaling and the showing of wealth. You don't want to be driving around, in a supercharged Range Rover, and showing people how successful and affluent and elite you are. What you want to be is you want to be quiet. When the nice thing about the intellectual freedom pursuit is doesn't mean you're going to go out and give sermons about it. I mean, it means that like Rand said, you can control my body, but you can't control my mind. It's two different things. Mm-hmm. Now, if you are entrenched in this system, which means that you've got 160,000 of student loans and your $400,000 house has a $392,000 mortgage, and your partner has a spending habitual spending problem at the Simon Property Group mall down the street, and you've never seen a credit card solicitation you weren't curious about. I mean, okay, you're in trouble, because the thing is you're not going to have any freedoms. It's going to go right into the next category. I think where we're going, the way you want to live is like a spider. You have these arms, and you're going to lose one, and you're still going to be able to walk and climb. It's not a big deal. Your goal is to not come out of this, having dominated everyone, and everyone says, God, this Morgan guy was so smart, man. He called it all perfectly. I mean, that's not really what you're going for. What you're going for is to evolve into the next phase with options, with intellectual freedom, and with the ability to make choices that you would not have if you didn't prepare and you were stuck in the other system. So it's a period of quiet. I mean, it's not a time to be saying I'm going to do a radio show about all these anti-government ideas and all this stuff. I mean, you'll end up with a child porn in your spam folder that you never knew about, and you'll be discredited. If that happened to people in this world, so I think there's a level of kind of obvious acknowledgement of what the system looks like. I tell people all the time, about taxes. I mean, people are upset about taxes. I pay them. I mean, I have to pay them quickly, and that's it. I mean, I'm not going for any sort of revolutionary beef with people that have 13, nuclear carrier battle groups under their control. Okay, like that's a suicide mission. I mean, so, however, as this evolves, there will be problems. There will be times where being free and flexible and intellectually having the capacity to think is going to be extraordinarily handy. And you're going to be able to live a better life than having tunnel vision and being stuck in the social credit system. Because remember, happiness and money aren't tied together. I mean, when you're younger, okay, you have to if you're young listening to this, until you make 80 or 90,000, depending on where you live, you're in trouble. Because I mean, you're having to make sacrifices that really hurt. Maslow's hierarchy of needs is a real thing for you. After you cross above a certain threshold, depending on where you live, money is completely irrelevant. You don't need $100 million or $200 million to be happy. This is not going to make you any happier. Okay, now it's going to give you access to more things, but if you don't know how to utilize them to improve your life, it's useless. It is all the time you see people that the family created a dynasty, and you got all these defective kids that are on drugs. I mean, they don't know what to do because they have no experience, right? So the reason why you're learning, the reason why you're reading the book, and the reason why you're watching these types of podcasts and studying and going to conferences when you can and all these different things is because you're trying to open the intellectual capacity so that you can assess what's going on and make decisions for the benefit of your life experience. That's the ultimate goal. You can't control where the system is headed. You can control how you're positioned for it. You can control how you react to a greater and greater degree of clamping down on what we used to call personal freedom, because that's long gone. I mean, that's, if you don't believe it, try going to the airport or going to the doctor. I mean, how about I know so many people, they think you got to have insurance to go to the doctor. I'm like, they'll take a credit card. What? They'll take, these people have lost it. This is a free market. Oh, is it really a free market? Right? Have you traded the S&P futures? You think it's really a unadulterated free market with price discovery? I don't think so. So it's all happening now. In the game plan, if people need to reorient their mind to, my game plan is to live a life experience that I want, and not be just shoved around by every changing detail, of the system. That's the ultimate goal.
Well said. One of the chapters is how much gold is enough, or something along those lines. What's your answer?
Well, you know how it is. You can't give people financial advice and all this stuff. So what we do is we give them a formula, and we do we say hypothetically 3%. Let's say you're worth, 100 grand or something is your net worth, and you start out with 3%. At the time writing the book, that was 2 coins. And people say, well, that's not enough. I mean, and we explain to them, gold is not really an investment asset. It's not, you don't buy a bunch of gold hoping that it goes up a lot in price and you make a bunch of money. That's what royalty stocks are for. I mean, Metalla, since gold's up 50% since we started Metalla's been up 1,100%, so in August, maybe more. That's an investment. Okay, so gold, the actual gold, is your fire insurance. I mean, that's not, you're not buying that to make a killing. And so when you lay it out, the way we try to lay it out is like, come up with a number. Now, of course, when I worked with the Agora guys and stuff, there'd be people that would say 20% is not even enough. I mean, okay, it's not going to hurt you. I mean, you can always sell it. You can sell it anytime, 24/7. You can sell the gold, or you can go down. But in my personal opinion, maybe 20% seems a little heavy, because there's so many interesting ways to play that rising gold price right now that do involve tremendous upside. You and I both know these ways. I mean, I think royalties are more interesting than mining stocks, but I mean, obviously there are some mining stocks. Monarch was bought today by Yamana, the people that recognized Wasamac early. We have a royalty on that, by the way. So I mean, but the point is that you've got to decide physical gold, how much do I need? Now, the second question is, what do you do? I mean, I give 3 dealers in the book that I think I've had experiences with them in business. I'm happy with all of them. I'm not recommending them, but if I would do that instead of go to Google, because you don't know where you'll end up. And then what are the ETFs? Some have the gold, some don't. By the way, just because they don't have the gold doesn't mean they're off limits. Because sometimes for trading, it's maybe better because you want to be, but you need to know that they don't have the gold, so you're not thinking you're buying something that you're not. So I think this is all new to people. You what's the allocation? I mean, maybe 3% physical, and then you add the royalty stocks, and then maybe a few mining shares if you can stomach it, and then you've built yourself a real position. I mean, that's the way you do it in the professional asset management business. I mean, you start from the top and you say, how much of this, what is my pie going to look like? You don't just go out on a whim and say, maybe I'll buy a round number of shares because it sounds good, and then, well, it's down, I'll buy some more. I mean, that's not a plan. That's just reacting.
Yeah, well, just for the record, the morning report has favored the royalties all the way up for a variety of reasons. In fact, you go back into the earlier days, and I'm going to pick a number. Someone will probably chastise me, but I'm probably 60-70% at one point were royalty companies. So there is a chapter here, the ups and downs of mining companies. But before we get there, I don't want to forget this one. This came in, so we're going to go kind of backwards. David, please get EB to talk a little bit about the copper nickel royalty company, Nova Royalties. They have just launched. So let's start there and then work backwards.
Okay, so this is what people need to understand. When Brett and I were managing the fund, we slowly noticed that the royalty business was far better than the mining business. And then next we noticed that there were thousands of orphaned royalties out there. This means like one guy owns something in Saskatchewan and just one guy. I mean, so they don't have a lot of value as one royalty. But if you could aggregate them, pull them all together into a company, we felt like you could give shares to each seller. And as you built the company, the royalties become more valuable. So with Metallo, you're up, well over 50 royalties, in the business, done 20 transactions, so anyway, so you see, okay, now, as we're doing that, we start knowing everyone in the business and all this as well. We start discovering that electric vehicle production can't happen without nickel. And all the suppliers know it. I mean, the nickel is the most problematic metal in the battery. And you think, well, what about lithium? Well, it's not that big of a problem. I mean, the lithium is not creating chokeholds. Well, what about cobalt? I've heard about cobalt. Yeah, but the new addition of the batteries is 8 parts, out of 10, 80% nickel component, and cobalt shrunk. So you really get down to it and you say, well, where does all the nickel come from? Well, about half of it comes from Russia and a quarter of it comes from Indonesia. Are you excited yet? So we figured out that copper and nickel are the two drivers. It's kind of like buying, oil in the days where the Model T was just hitting the road. You could see, if you saw far ahead enough, that you're going to need a lot of oil and you're going to need it consistently available, and the price of it is way too low, and it's going to turn into a huge industry. So we launched Nova Royalty. The ticker is NOVR. Brett and I are involved. I'm an advisor. Brett's the chairman. And we have a management team that's separate from Metallo, so there's no commingling of business. It's a mistake to try to do all these different metals in one company, because you don't achieve a high valuation. When you're very focused in the royalty business, you achieve a higher valuation because people realize that you really know what you're doing. And base metal royalties and precious have different values. Okay, so we launched this October 1st. The stock is about $1.25 today. I mean, we always run this a few minutes after, so I mean, it goes to $1.30. People are upset, but the stock, we did a private placement at 25 cents in 2018, and then 50 cents in early 20, and then came public, and it's trading at about $1.25. 15 assets. You've got Nueva Union, which is a big tech Newmont copper gold asset down in Chile, and Metallo took the gold, and Nova took the copper. Perfect example of being able to get involved in more transactions, by having both companies kind of have a similar approach. So Nova's at 15 royalties. It will continue to acquire in the third-party market. Now, just remember, everybody says, I thought royalty companies finance mine development. Maybe some do. That's not what we do. Okay, so we're acquiring existing royalties from third-party owners. Company A has a royalty on Company B. Company A would sell to us for stock or part stock, whatever they want, really. It's up to them, and hopefully become a shareholder as the company grows. So I'm very optimistic about that company. And people should see that Metallo's track record is your reputation. I mean, Metallo has not been a hockey stick crash to the ground. It's gone up and done more deals and settled down, and then done more deals and gone up, and it's been the same for 4 years now. It started at $1.20. Stock's about $10 today. It's been over 13 Canadian. So with Nova, it's early days at Nova. I don't know that the trajectory will be exactly the same, because there's different drivers behind those markets. I mean, copper looks very strong right now, but copper and precious move in a different way. That's why they belong in different companies. But anything that we've talked about here, by the way, they can see on the Nova Royalty website. There's a great presentation. The U.S. OTC stock is not listed yet. It should be listed at some point soon. So I think it's that early days, and I think people can now's the time to at least familiarize yourself, because it's a very serious team that we've got running these things, and very focused, and the results have been great, especially for people that ask these questions early.
Great. Well, we're out of time, so I'll just defer back to you. Where can people get more information, buy the book, see the royalty companies, get in touch, and all that stuff?
Well, the first thing, why gold, why now? I mean, it's available at Amazon, Audible. You can get it pretty much worldwide at Amazon, either paperback or Kindle. They've done a great job of putting the book out there. I've had people from all over the world messaging me on LinkedIn, which is a good place, to follow me, because I'll post things, when deals are announced with Metal or Nova. I'll post the press release, and it's a great way to keep up. As far as the companies go, read the book and see, like you saw, the philosophical kind of construct behind Metallo. Why did we do it? It wasn't just an accident. We had something in mind when we started the company. We had an idea. In the book, I tell you the whole idea. So it's, once you see that, I tell you in the book too, you're not going to need me anymore, because I'm telling you exactly what we did, to take action here. And then you see what we did with Nova, and you'll start saying, I get what these guys are up to, and I see what they're doing. And so, the goal is we show you everything. It's not just some hot stock tip. It's like we're up to something very deliberate, and that's hopefully going to continue. I mean, I'm certainly thinking that we're just around the corner from a surge, in metals, and we've done all this work for the surge. So it's not too late. Buy the book, read it, send me a LinkedIn request or a note on LinkedIn when you're done reading it. And then, David, let's come back in the future and hold me accountable and see if any of this stuff panned out the way we thought it would.
Very good. True pleasure. These 45 minutes or so just went by so quickly. You know me, I have to have the final word, not always, but one of the earliest times I was asked to speak was at the SME, Society of Mining Engineers. And I gave my little lecture on silver over in the Silver Valley. Where I'm sitting right now is about an hour and a half drive by my beat up pickup truck. I still have those as a memento. And this old timer came up to me and he says, I've always made more money in paper silver than I ever made in silver. And, royalties really weren't that well known, 2 decades ago. I mean, you had your Pierre Lassans and your Samir Schulich and some visionaries, but really, they were financing companies, as you mentioned. The point I'm making is just to kind of tie this whole thing up. Hopefully I'm doing an adequate job. Look, there is more money to be made when you do a discovery or you buy a royalty off of somebody and you value it properly than you're going to get just holding a static investment. Now, look, I'm an advocate of owning physical metal, but that's not all I advocate. I really, really think that the most money can be made in developing situations that benefit. Let's say holding a gold coin doesn't really benefit anything, but getting the royalty company that has an edge on nickel that's going to be needed for EV in the future. Now, there's something you can look as a growth prospect. So let me give you the final word. I'm going a little bit over here. I got an interview waiting, but I hate giving the last word. I'm interviewing you. If you have anything to add to that, please do, and I've got to go.
Schulich and Lassonde paid $2 million for Gold Strike in Nevada. I told the story in the book. It's returned $1 billion in payments, $1 billion off $2 million. That's what people need to understand. So, if your nickel goes like this, nickel royalties like that. That's why we built the thing. So NOVR in Canada and soon in the US, and Metallis MTA in Canada, MTA in the US. Take a ride with us.
Great. Real pleasure. We'll be back. We'll do it again.
Thanks, David.
Okay. Bye for now.